In today's video, we're gonna take a look at some stocks today and see what they're all about. But breaking news, your boy Jack Ma has finally been found. So Jack Ma finally made his first appearance since October, I believe. And he was talking to some teachers, underprivileged teachers in another country. I believe it was India. But he's back, and this pushed the stock price of Alibaba up to, past $260 something. Before we get into the video, don't forget to smash the like button, and also links are gonna be in the description for some free stocks. 4 free stocks with Webull, 1 free stocks with Robinhood if you're brand new to trading. But let's jump right into it. So let's jump into the portfolio to see what is going on here. Portfolio is sitting at $92,000, and today is probably one of the first red days of the month for me. Pretty crazy how the stock market's been. So I'm down about 1% on the day, not too bad. But we're gonna scroll down and just take a look at what is going on with Alibaba. I feel like I've been talking about this company constantly now for the last 2 weeks, but I just wanted to let you guys know what I think about it. So this is what has been happening with Alibaba's stock price over the last 3 months, okay? So in October, he made a speech in China which criticized the government and how they handled their finances overall. This plummeted the stock price over the last 3 months, over the last 2 months. In October, there was the Ant Group IPO that misfired, and they have to redo that now. And all the way to the lows in January of 2021, we can see the lows of $225. And yesterday, we found out Jack Ma was not missing. Obviously, he's not missing. I'm telling you, there's so much clickbait articles out there. You guys just have to, read in between the lines, all right? A lot of these companies, they publish all these clickbait titles so you can click onto their websites, click onto their articles, so you can read them, and they get AdSense money. Similar to what a lot of YouTubers do out here. So yesterday, the stock price jumped all the way to $270. A lot of people's been messaging me saying, oh man, thank you for putting me on Alibaba over the last 2 weeks. But today, the stock price pulled back 2% on the day, and we're back to $259.50. So taking a look at my position here, overall, I'm still up. I own 30 shares now, and I'm total return is still at $363. Like I said, my plan for Alibaba is to own 100 shares. It's gonna take me maybe another, few more months to do this, but Alibaba, I believe, is gonna push my account over that $100,000 mark. My price target for Alibaba is still in the $300 range, and I'm a long-term investor when it comes to Alibaba. I'm gonna be holding it for a few years at least. It might take another year or two for Alibaba to reach that price target, but I could be completely wrong. That's why this video is for entertainment purposes only. So I wanna make a few more bullish cases for Alibaba, and then we can move on to the next stock here. So Alibaba has just recently partnered up with Hermes. This is one of the top luxury brands in the world, and they did that through, let's take a look here. Hermes has joined Alibaba's Tmall, which is basically like a retail e-commerce site, quietly. So they're planning to sell perfumes, body lotions, and gift boxes on Alibaba's B2C platform with 2,250 followers at the moment. So I think this is a good small victory for Alibaba and the whole made in China type of stereotype, because everything right now comes from China, if you guys didn't know. All the luxury stuff and all the cheap stuff, right? It's not just all the cheap stuff now. So Hermes is one of the top luxury brands in the world, even bigger than Louis Vuitton, Prada, what else? Balenciaga, all of that. And this stuff is so exclusive when it comes to their handbags and stuff. I'm not entirely sure if they're gonna be selling handbags in Tmall, but definitely this is the right step into selling the handbags if they wanted to. But this is definitely the right step. And like pro tip for anybody that's in a relationship, if you want to make your wife or girlfriend happy, buy them a Birkin, and they'll probably marry you after that. So with all jokes aside, let's take a look at some EV companies that have been partnering up with Alibaba. So Alibaba has some investments into EV companies. So if you want to skip Tesla, if you want to skip NIO, you can just buy Alibaba and have some exposure into the EV market. So before I even bought Alibaba, I just realized they have some partnerships with some EV companies. So if we take a look here, Alibaba launches electric sedan in partnerships with China's largest automaker. So we take a look here. They launched an electric sedan with state-owned, I think it's pronounced SAIC Motors, China's largest car company. So the main gimmick, if you want to say that, this vehicle can wirelessly charge, which I'm pretty sure Teslas cannot wirelessly charge, or any of the EV cars in America. I'm pretty sure you have to like plug it in for them to charge. The sedan is powered by new solid-state battery for contemporary Amperix technology, which also supplies Tesla Inc. It also uses chips made by NVIDIA Corporation. So we already know Tesla, NVIDIA, these stocks are always talked about on YouTube. They've been on fire for the last 3 months, and if you're invested in them, congratulations, you've probably made a lot of money, but I think Alibaba is still undervalued here. It's still an undervalued play. So the next EV company that Alibaba is invested in as well is XPeng. So XPeng, I believe, IPO'd last year. You can see their stock price reached up to $72 per share, and with a market cap of almost $50 billion. So this is not a small company at all. And Alibaba owns 14% of this company. So after doing more due diligence with Alibaba and figuring out everything that they got their hands on, they got their hands on finance with Ant Group, they got their hands on with the EV play as well. They make so much money with their cash flow from their commerce business that they can just funnel billions of dollars into all of these other smaller companies and have these companies grow. So this EV play from them is obviously a smart move because the EV market's been on fire as well. So now I'm not too worried about, getting into companies like Lucid, getting into companies like ACTC. Some of these other ones that are just brand new, they haven't been to market yet. But like I was saying earlier, there's a lot of rumors going on with Churchill Capital and Lucid that they're gonna merge together, and that's how that EV maker wants to come to market. So another company that's been on the news lately is Archlight Clean Energy, ticker symbol ACTC. This is an EV play with Chamath. I can't even pronounce his last name. He just said, I made it my biggest investment in climate change. ACTC is merging with Proterra. So I think they do like electrified buses. And this is, Chamath has not missed yet with any of his investments, but because now I have a little bit of exposure to the EV market, I'm not too worried about getting onto this one as well. So for anybody that wants to try to get onto the next Tesla, potentially, go check out those two companies because definitely they have some potential. But there's also a lot of risk involved as well, just in case some of these rumors don't pan out. So lastly, I want to talk about selling puts with my portfolio. So, you guys know I love dividend investing. I love, like right now I'm seeing about $400 in dividends every single month on average. And if you want to sell puts for more income, that's one way to go, but that is like dividend investing on steroids. So let's jump into my buying power really quickly. So my buying power, I got $10,500 left. Margin available that I have with my portfolio is about $55,000. I use about $3,000 in margins to buy some Alibaba. Options collateral. So this is what I'm putting up for collateral on my portfolio. I'm putting up $40,000. And over the last week, I think I made about $800 in premium. So I put up $40,000. I make about 2% of that in premiums. I feel like this is really, it's not conservative, and this is not gonna be for everybody. But if you have enough collateral to do this, maybe you can make like 1% or less. That's more conservative. Like me, I'm being a little bit too aggressive here. I'm going for 2%, which is, making me stressed out a little bit. The company that I made the most out of selling puts and collecting premiums from is Lemonade. All right, so if we scroll down here, I made about $465 from Lemonade over my last contract, and it's gonna expire tomorrow. And from the looks of it, I'm gonna be pretty good unless the stock price of Lemonade crashes tomorrow, which is completely possible. But my break-even price is still gonna be $135. So if we jump into my history here, we can see all of my sell puts that I've been doing over the last few weeks now. Today I made about $480 in premiums. And sometimes you have to buy to close some of your premiums just so you can open another one. It's really common to do. I had to pay $150 to close my last contract to open a new one to make a little bit more extra premium. On January 15th, I made $440 there. On January 8th, I made $800 there. Last week or 2 weeks ago, something like that, January 7th, I made about 310 bucks. So I've been doing this on and off again for the last 2 weeks now, and I've seen a decent amount of. And to do this, I have to put up at least $14,000 in capital. That's why I really don't talk about it in these channels, because a lot of you guys are younger, have less capital, and I don't want anybody to do anything too risky. But for anybody that's on the opposite side, a little bit older, have more capital to play around with, and understands the risk involved, then definitely selling puts is definitely a way to generate a lot extra income every single month. Because I'm doing this once a week. Imagine I do this consistently throughout the year. It adds up, right? It adds up a lot. I've seen a lot of other investors do this consistently. Maybe they make 1% of all the collateral that they put up, and if they can do that consistently throughout the year, that is a lot of money. So now I want to go over my sell put with Alibaba, which I've been making decent amount of premiums from this one as well, but definitely this one, my last one, is not that good. So this is one of the risk involved here, right? So I did a sell put at $265 strike price, which if we take a look at the start price right now is $259. So if the price does not improve by tomorrow, which is the date of expiration day, then definitely this one will get assigned. But what I plan to do with this is I'm going to roll it over until next week. So this is a strategy within a strategy here. All right, so I could just move it on to next week, and I could put it at like a $260 strike price. Like I said, I believe Alibaba is still worth over $300, so I'm not too worried if for whatever reason I want to just own that 100 shares. I have the money to pay for the stocks. So worst case scenario in this situation, I have to buy the stocks. But if I buy the stocks, I have enough money to pay for it, and then I can just flip it around, and then I can just do sell covered calls. So if you guys are a little bit confused about everything I'm saying, I made some older videos about selling covered calls, selling cash covered puts to generate more income every single month. So if you guys want to see more investing content from me, go check out these videos here. Like, subscribe, hit that notification to get more content from me, yours truly. Follow me on Instagram, follow me on my second channel. Join my membership if you guys haven't joined yet, and I'll find you guys out in the next video. I'll check you guys out in the next video. Thanks for watching. Bye.